Into the boxes, we see our friend Josh Enomoto. He's a contributor for TipRanks and Fintel. Josh, good to see you. I have been wrong pretty much about everything this week. I thought the markets would go up, it went down. I thought they would go down, it went up, and here we are scratching our heads. I know we got the interest rate problem we had, then we blamed, I think, the UK for the other problems we had. So it seems to me that we don't have a real good grip on what's driving the markets. What's going on here?
There's a lot of uncertainty about how the market will proceed forward, and unfortunately, even the best experts on Wall Street are left in a circumstance of ambiguity. For instance, with the UK, yes, that was a major problem, but it was also a localized problem for now. However, there are fears that the circumstance involving the central bank rushing in to buy back bonds to soothe market sentiment, that could create a cascading effect in other parts of the world. For instance, people should really pay close attention to what is going on in Japan. Japan's central bank is keeping interest rates low, whereas everybody else is raising interest rates to unwind the excesses associated with the pandemic. And so Japan historically has been a long-time buyer of U.S. debt. However, if Japan encounters some kind of serious problem, a black swan event, it's possible that they could unwind those purchases, or they could even start selling U.S. treasuries. And if that happens, then the Fed might have to come in and buy back those bonds, and it would create a countervailing force to what it's doing right now, which is trying to raise rates to control inflation. So there are a lot of variables and implications about what's going on in the rest of the world that Wall Street experts simply don't have clear answers to.
Right, but wait a minute. If they sell the bonds, that means the rates are going to push higher, okay, which is what the Fed wants us to believe, that rates will stay high for a significant amount of time in the future, and that would be anti-inflationary nonetheless. I guess my question is, why should the average person here in America care what Japan does with their policy, whether it's good for their country or bad for their country? I mean, I hate to be selfish, but we are obviously obsessed with what the Federal Reserve is going to do over here, aren't we?
You're absolutely correct. But we also have to realize that the global economy is very intertwined. And so, again, Japan, it's not so much about Japan, but they happen to be one of the biggest buyers of U.S. debt. And so that has kept a certain level of stability and predictability, and it has allowed the Fed to do what it's doing right now. But if Japan starts reversing course from their historical trends, and they start unwinding this, or they start actually selling U.S. treasuries, the Fed has to respond, because that's a circumstance that they've depended on for decades.
Okay, so here's the list of things I'm worried about. I'm worried about what Russia is doing. I'm worried about what's going on in Europe. I'm worried about what's happening in the UK. And now you're going to add to the list the Japan thing, and of course we're worried about rates. So there's a lot on our plate here. The IMF and the World Bank already gave us this gloomy forecast that we talked about earlier. What are we supposed to do for the rest of the quarter here? We can't just keep watching the same show over and over again. Is there anything that we can do as investors? Like, should we do anything, or should we do nothing?
Well, investors, unfortunately, they have limited choices, but there are still ways to address this situation. So investors should really focus in on companies that benefit from inelastic demand. So for instance, car insurance companies, 49 out of 50 states require car insurance. So they have essentially a hostage audience. Also, take a look at utility firms. Obviously, irrespective of economic forces, households have to consume a certain baseline of energy. And so utility firms may be a viable investment idea, particularly companies that are that have coverage in states where millennials are moving to. So that's where you can those companies which enjoy millennial influxes, they might benefit in the future.